All right. My name is Ryan Cooney. I'm a loan officer with Homestreet Bank's Affinity program. Um, and welcome to today's presentation on buying a condo. I've been with Homestreet Bank for almost 11 years now. Also an alumni of the University of Washington. Okay, so today we're going to be talking about buying a condominium. So we're going to go over some definitions, some pros and cons of ownership, what specifically makes a condo different, as well as some financing options and information as it regards to condos. And then in a more general sense, I'll go over the first time homebuyer's checklist and the homebuyer's process. So even if you're not necessarily looking for a condo, that will be a beneficial area as well. And then we're going to touch on some new home ownership costs and some resources. Okay, so what is a condo? A condo is a building structure divided into several units that are each separately owned, surrounded by a common area that are jointly owned. Condo itself can take on various forms, ranging from your basic studio apartment outlook to up to what appears to be a traditional house with your own yard and your own specific area. And the difference being that the common area is not owned. You don't own the land itself in a condo. You're owning a portion of the land, and you're owning basically the walls in, and not usually the land itself in a condo. So let's go over some pros and cons of ownership and try to think about these in the context of your own wants and needs in home ownership. So pros, we have location and affordability. Those kind of go hand in hand. There's often the higher concentration of condos in urban areas where land is at a premium. So that ties into the affordability, where you have a wider range in prices. Some things closer to the city might be more affordable in condo form versus the single family residence. So if you want to be in the heart of the city, close to restaurants and entertainment, the condo might be a good choice for you. And then in terms of affordability, if you're thinking, in Queen Anne, can you purchase a single family home for 300 to 400,000? Probably not, but you might be able to find a condo in that area. So if that's the neighborhood that you want to be in, a condo might be the right option for you. In terms of the cons, what you own when you're buying a condo, as I mentioned before, you're not owning the land itself beneath the building. You're simply owning a shared interest in the land, and what you're owning is the walls in portion. And then another con would be, can be not always true, but it can be the resale value. They're more sensitive to market trends in real estate than your traditional single family home. And that just ties back into not owning the land itself. And when you're not owning the land itself, there's less options with what a potential buyer could do with the property. So for that reason, that's why you're more susceptible to different market factors. Think of the old Econ 101 term of elasticity. So a condo is going to be much more flexible in terms of having different outside factors playing a part. So one example of that would be if the rates go up like they have been, you're having less buyers in the market because people are getting priced out of the market. And then the condos, since they have since they're flexing more with the market, they're the first ones to go down in value. Okay, another pro is going to be security. So you're having neighbors around. It makes it easier to lock up and leave for an extended period of time. You're also likely going to have less points of entry, so it can be more secure that way. Some condos feature more security features like an entry buzzer, gated oftentimes into the building itself, sometimes to the specific floors, depending on the condo unit. And with that security leads to a con of community living where you have shared walls, common areas that are more likely to hear neighbors, and you run into them more often. And part of that, you'll also have to coordinate with neighbors to come to some decisions regarding common areas. So just a little bit noisier, and sometimes a little bit noisier, sometimes a little bit less private. Although the way they're building single family homes in Seattle right now, that seems to be more common anyway. Another pro is going to be low maintenance. So no more backaches from mowing the lawn, shoveling snow. Condo living means someone else is taking care of the common areas. So if you're not a person that likes to cut grass or take care of the yard, a condo is just an easier, there's just less responsibilities outside of the walls themselves. And then in addition to that, there's just less maintenance overall in terms of having to worry about, say, things like the roof, gutters, siding. Water intrusion is a big issue in this area, and not having to maintain all those external features of the house might be something that appeals to you. But with that, one of the biggest complaints in terms of condos is going to be the fees, or the homeowners association fees, HOA dues. They handle, just the day-to-day maintenance of the condo, common areas. And whereas I said you don't have to worry about things like the foundation, water intrusion, siding of the house, things like that, the condo fees themselves may go towards taking care of that. So the fees may change over time. And also some of the fees may be going to things that you may not be using in the condo. If there's, say, a pool that they're maintaining, or a gym or anything like that, you don't use those common areas, you're paying for something that you're not necessarily using. And is there any questions so far?
No questions so far.
Okay. We'll just keep going then. And on to the last page of the pros and cons, the amenities, as I mentioned. So you have a range of things that really varies depending on the condo. Some places are going to have a gym, tennis courts, swimming pool. So if you are paying homeowners dues and you would normally buy a gym membership, that might come with the condo association itself. Oftentimes they'll have a common area where you can get together with a larger group of friends if your unit is smaller, where you can watch a game together, and they might have a common kitchen that you're able to rent out space in, or maybe a rooftop area with a barbecue that's shared among the other owners of the condo. But with that comes the rules that go along with managing the common areas. Condos recently have come under fire for having quite strict what's called CC and Rs, covenants, conditions, and restrictions, depending on the specific homeowners association that you would be looking at. Make sure that you take a look at what those CC and Rs are. The leveling managing everything from noise levels to weeds in your yard to the color of your door, what type of curtains that you might put up in your windows, what type and size of pets that you own, or even what type of breed of pet that you own can be in the CC and Rs. So just make sure that you are aware of what the rules of the condo association that you're thinking of buying are, and make sure that that's something that you are willing to be a part of. Okay. That kind of covers the condo association. You're taking the good with the bad. You had unit owner is a member of the condo association, they'll usually have an elected board that enforces the bylaws and handles the maintenance and repair issues, as well as the bigger repair issues and maintenance that come along with the condo unit or the the entire condo building as a whole. Excuse me. And then in looking at the condo association itself, sometimes, as this is just fellow homeowners, they may not be experienced or have the professionalism of necessary to manage a condo association. They may also delegate power out to a management company. So all things to keep in mind when shopping for a condo is who is managing the building as a whole. Because if it is poorly managed from the beginning and repairs are neglected, that could mean higher dues going forward and possibly affecting resale value down the road. Okay, so we'll go to some considerations. These are just going to be more generalized for now. Is the community new, established? Is the conversion? How long has that management company or homeowners association been in place? And then what is the differences between the units? Are you buying, are they all relatively the same? You can get an idea of what other units have sold for recently and see what's different about that unit and roll that into your decision. What is the intended use of your of the condo that you're looking to buy? Are you looking to buy this as an owner-occupied property? Are you looking to buy this as an investment or rental property? Are you looking to buy the property and then possibly convert that to a rental property down the road? Those are all things to keep in mind. Also, doubling back to those CC&Rs, because they may have restrictions on if you can buy the property as a second home investment property, or maybe some limitations on if you can convert the property to a rental property, or if they need to approve any new tenants that come into the property. Touch on the homeowners' dues factored into qualifying ratios. So the dues are factored into your qualifying ratios, but they are not made as a payment to as a part of your mortgage payment. So you will need, when you're looking at getting qualified, they are taking those dues into consideration, but they are paid separately. Okay. Now we're going to talk about financing options, and I'll try and keep this focused on condos specifically, since that's what we're all here for. But I'll start out a little more general in thinking about loans in the greater context. A loan is a product, and what you are buying in this case is the cost of money, or what's your interest rate? What is that money going to cost you? So mortgages are a risk-based product. So the more risk you have, the more cost you're going to have to acquire that money. What are some risk factors that go into that factor into your interest rate? It's going to be things like credit score, property type, whether that's a single-family condo, and the down payment percentage are some of the most common factors that go into what makes up the rate. So with that in mind, there are different down payment requirements, or there's different options for down payment. If you're looking for a conventional loan on a condo, typically 5% would be the minimum down payment. There is a Fannie Mae Home Ready program that seeks to balance out some of those risk-based add-ons to the rate. And so it does remove some of the cost of putting down, say, less than 20%. It does have an income cap. I believe most of King County right now is a loan max in qualifying income of 109,000, somewhere in that range. And so then that's not household income. So if you're the only one on the loan and you can qualify with an income of less than $109,000 and you're putting down less than 20%, the Home Ready program might be a good option especially for first-time home buyers. Okay, and then FHA financing has a down payment minimum of 3.5%. On the FHA loan program, the credit score does have a lower impact on the overall interest rate. This option has become a little bit more popular recently because they've recently lowered their mortgage insurance rates to something that's a little bit more competitive and more affordable in this area. So if you the lower down payment and credit score is less of a factor, FHA financing might be something to look for in when you're discussing that option with loan officer. Newly constructed condominiums. That's so one more aspect of approval that's different when you're talking about getting financing for a condo is not only do you need to get your loan approval, can you qualify for the loan? Do you have the verified funds for the loan? Do you have the credit score? They also look at the condo and need to approve the condo. So if and FHA and conventional have different their own unique procedures for reviewing what is an eligible condo. And if the condo is ineligible for those financing, you won't be able to use financing to buy that unit. That process is a review of there are several things that go into that type of review. Not necessarily anything that you can pick out right away, but they do go through that review process during the loan process. Through a condo questionnaire covering things. Just for example, it can't be like a timeshare. They have to have enough reserves in their condo budget and some other things like that. Move on to closing costs. So in addition to coming up with a minimum of 3.5% to 5% down payment, expect about $4,000 to $5,000 in closing costs, and then about $3,000 to $6,000 in prepaids. So you're looking at anything from an additional $6,000 to $13,000 in closing costs, just depending on the what are the specifics with the property that you're buying. I'll go over the difference. Closing costs are the hard costs. So these are going to be lender fees. They're just going to be title fees, appraisal fees, and things of that nature. Prepaids, on the other hand, that $3,000 to $6,000 number, that's things like property insurance, real estate taxes. So we would collect money upfront to pay the real estate taxes and property insurance for a year, and then we would spread out. We're adding in a monthly version of that into your monthly payment to pay the next year's. So there is a little bit of an upfront cost in getting that all set up, and then the property taxes, insurance would become part of your monthly payment. So first-time homebuyers checklist. So congratulations, you're already at the first step. You are educating yourself on some of the basics of the process. It's time to consider what your housing needs are, what your housing wants are, and then what your housing limitations are. So how all those three things kind of play into each other, what you need, like, do you need 2 bedrooms? Do you need a yard for the pets? And then what do you want to have? Do you want to be in a specific neighborhood? Do you want to have a condo because you want less maintenance and upkeep? And then working with the lender, you're going to bring in the limitations in terms of what's your income, what's your credit, what's your down payment. All those three things play into each other to where you can come up with what is going to be your price point for purchase. So meeting with a loan officer and getting pre-qualified would be the next step. You're going to be eliminating a lot of variables that I just mentioned, and it's going to help you narrow your your housing search into a more specific price range that's both going to be within eligibility, and it's going to be in your personal budget. So what's that monthly payment going to look like along with those HOA dues? Is that a number at that price point that you are comfortable making on a consistent basis? Okay, when you're getting pre-qualified, here's some basic documentation that you're going to need, as you are all University of Washington employees. I know that you're W-2'd and that you are paid twice a month. So think at the minimum, you're going to be needing 2 pay stubs, 2 W-2s, and 2 months of your most recent bank account statements for that's going to include or specifically to what's going to be used for down payment and closing costs. So that's 60 days worth of bank statements, pay stubs, and 2 years of W-2s. If you have additional employment, that's self-employment, that's going to open up another level of documentation. You're going to need 2 years tax returns. If you're going to be buying the house with someone and another person on the loan, if your partner is self-employed, that might open up some additional needs for documentation as well. Okay, the next step is going to be finding a real estate agent. You're going to want to find someone that fits your personality and someone that you can trust. So take time to conduct interviews before you're going to look at homes. Make sure that you're with someone who's working in your own best interest. We, at the Affinity program, we do have some partner realtors who are able to provide you with a benefit that I'll go over later in just a bit. And so if you are in need of a real estate agent and would like to take advantage of extra savings on the closing costs, I'll go over that towards the end. And I'm just going to pause there for a minute because I want to recognize this point in the timeline, because this is where you have no pressure for timing. A pre-qualification is good for about a year, so there's no pressure on finding a place right away just because you applied for a mortgage. There's no pressure for commitment. You can go through this process all the way through meeting with a realtor, and you don't need to buy anything, and there's no pressure to buy anything. Also, there's no commitment for cost. So there's no cost in necessarily setting up a pre-qualification. So this is where you get to go out, look at homes with a realtor. You are pre-qualified and you get to enjoy, and I would recommend enjoying the process of looking for a home, because the next steps all have to happen within about 30 days. So they go very quickly, and it can be a little bit stressful if you're not prepared for it, but everything up to this point can be completely up to your timeline. However fast you want to get in documentation, however quickly you want to look at homes, it's completely up to you. So when you're ready to make an offer, so you've built your loan team, you have your loan officer, you have your realtor, you've picked out a price point that the realtor is aware of, that you're aware of. When you're looking at properties, you know that you're ready to go right away if the right one comes along. The agent will submit an offer on your behalf saying, buying, we'd like to submit an offer on this unit at, say, $400,000. We're looking at a 5% down with a 5% down payment. Then they're going to, if the offer is accepted or they counter offer, the realtor is going to be negotiating any terms along with you on that front. Okay, so then once you're under contract, you're going to want to forward that purchase and sale agreement onto the loan officer, let the loan officer know so that they can lock in an interest rate if that's in your best interest at the time. You cannot lock in an interest rate until you have a property under contract. So it's a very important time to make sure you notify the loan officer right away and go over options with them right away. At that time, you're also going to be ordering a home inspection. Excuse me. Want to take a minute here to go over a home inspection versus an appraisal. While they're both physical inspections from a licensed agent, the home inspection is on your behalf and the appraisal is mainly on the lender's behalf. What the inspector is doing is they're looking at all the systems of the house for make sure that everything's in working order. If there's any hazards, they're going to call that out to you. If there's anything that needs to be addressed right away on the house, they're going to call that out to you. And then on an appraisal, it's more looking at market comparability. Is the loan or is the purchase price approximately what other similar units are going for at the time? And they're also going to be looking to see if there's any clear and obvious health or safety hazards located on the property that need to be addressed before closing. Okay, the home inspection typically needs to happen within 1 to 5 days of entering the contract. It can also be done before making an offer. Although the past couple of years, there has not been most inspections, if they were not waived by the purchaser, they were done after entering contract, and then you would have a contingency period where you have time to get an inspection. And if there's non-satisfactory inspection, you can notify the seller and either renegotiate or decide to back out of the purchase and sale, and that would be written into the contract by your agent. Okay. During this whole process is where we're going through the loan review with an underwriter. So that's just going to be verifying that everything you've provided is satisfactory in terms of eligibility, reviewing the appraisal, reviewing the condo review, as well as you will need to shop for homeowners insurance when you are looking at a condo. Sometimes the homeowner's insurance might be included in the dues. So that is something that the lender will notify you of. We get a master insurance policy for a condo unit. And that's going to tell us if that includes what's called walls-in insurance, or whether the insurance that the condo dues cover only covers the exterior of the property, and then you're responsible for any homeowner's insurance claims that happen within the walls of your unit. Okay, and then also make sure that if there is any changes as a result of the home inspection, to let the loan officer know, and they will likely order the appraisal at that point and continue on with the process. Those middle steps there all kind of happen at the same time or overlap a little bit. So just the loan officer will work with you through each step of those of that process, and I'll go through a more of a bullet pointed list in just a few slides here. And lastly, you want to be prepared the week before closing. You're going to be setting up a signing where you will need to meet with a notary to sign the final loan documents, as well as transfer the remaining funds due at closing. That's going to be the majority of your down payment and the closing costs and prepaids. And that would be minus whatever earnest money you put down at the time of the contract. Okay. It says you'll need to provide a cashier's check to the closing agent. You'll want to just confirm that directly with the closing agent, whose contact information will be provided at the time of entering contract, with their specific instructions on how they want to take the cash for closing. Whether that's wire or a cashier's check will just depend on whatever their procedures are. So just to kind of circle back to, might have a question about when do I need to pay any money, as there's no fees associated with pre-qualification. When you do enter into a contract, you will need to put down part of a down payment, which is the earnest money. It can range anywhere from $2,000 up to $50,000, just kind of depending on what your offer is. Some agents believe that a big earnest money leads to a stronger offer, because that is the money that you're putting down at the beginning of the process. And then the remaining funds due at closing, so all those closing costs, prepaids and down payment, is all going to be due within 2 days of the end of the contract. Okay, we'll go over some new homeowner costs. So here's some kind of some 5 specific costs that are in all the excitement of buying your home, you may forget and don't realize that there's some expenses. So beyond things like movers bills, if you have to pay anything to get out of a lease that you're in, here's some things to consider. So there's, in addition to paying your principal and interest on a mortgage, you are paying the real estate taxes. So that is something that's going to be property specific or unit specific. So that's going to range depending on any estimates you receive during the pre-qualification process. That's going to be refined to your specific unit when you purchase a house or condo. So just keep in mind that real estate taxes and homeowners insurance are a part of your monthly payment, but just to keep that in mind. And then utilities, if you're already renting, your landlord may be covering some of your utilities to make it more attractive in this market. If that's the case, you may be surprised on what your utility bills may be. You can take a look at what's covered in the utilities on condos. Sometimes they have a flat charge for electric or water or gas or whatever it is. But so that's just something to keep an eye on. Biggest cost associated with new home ownership is likely going to be furnishings. It's probably also the most fun, but if you have now that you know that you're going to be in a place for long term, you may want to spend a little bit more on furniture. Maybe your old furniture doesn't fit quite right in the new living room. So there is that is something to kind of keep in the back of your mind if you have some money and set aside in addition to the closing costs in order to get some new furnishings for the new house or condo. And then, of course, repairs and maintenance. Home inspector, real estate agents might be pointing out a few things that might need to be addressed, whether it's just kind of fixing up a cabinet or you need new curtains, things like that. They can catch you off guard and they can add up quick. So it's a good idea to start a separate savings account for home repair and maintenance. This can help you track your expenses and you can dedicate a portion of your budget to the necessary expense. They recommend that you set aside about 50 months in the first year for repairs and maintenance. So be prepared. You guys are already on your way there by just by attending this and starting to think about it already. But it's best to expect the unexpected. So that means making sure that your first priority is that you're finding a mortgage payment, and that includes HOA dues that is within your budget and and that you're comfortable paying every month. Prudent budgeting can be practiced to help you afford other expenses, from real estate taxes to transportation. Okay, so now I'm going to just do a quick recap of that process. So you are at the first one, which is attending a homebuyer session. The next step would be to consult with a loan officer, get your specifics down, narrow down your price point, the loan amount that you're comfortable paying, and what you qualify for. And that can be done in coordination with applying for the mortgage, or you can just consult with a loan officer and just to get an idea of, say, something that's 6 months to a year down the road. Always happy to chat and go over any questions that you might have. So once you've got your loan officer and a mortgage application in, you're going to find a realtor. And then you're going to go with that realtor to view properties, go make an offer, sign a contract. You're going to get your home inspection. Onto the loan review process, which includes reviewing of your income, assets, and credit documentation. Be taking a look at the appraisal as well as the condo review, and then also a title search. If you do not know what a title search is, it's an important part of the process where you're going to receive a report from a title agency. What that's going to be doing is it's going to be verifying the legal boundaries of your property, whether that's a house, so around the detailing the lines of your property, or in case of a condo, it's going to be the area of the entire condo building itself. But then also restricted down to what you specifically own, which would be most cases is the walls in of your specific unit. And then once all that's taken care of, you have your final loan approval, onto meeting with the closing agent and signing the final paperwork, and processing the final money transfer over to escrow. And then finally, you get the keys. You get to take the picture in front of the for sale sign with the realtor, and congratulations. Okay, do a quick review of the Affinity program benefits. The first one is, and what you're probably most interested in, is the cost savings. We are able to provide University of Washington employees with a 0.5 point of your loan amount as a credit towards closing costs. So what that means is, if you're getting a loan for $400,000, 1% of that would be $4,000, half that would be $2,000. So we'd be able to give you $2,000 off of those closing costs that I mentioned. And then if you elect to go with a participating realtor, they can provide you with up to 1% of the purchase price. So if that condo that you're buying was $450,000, you're getting a $400,000 loan. They can provide up to $4,500 in addition to that $2,000. So those cost savings can really add up, and sometimes they're able to cover all of the closing costs. Just kind of depends on the price of the unit that you're buying. If you are finding that down payment is your biggest concern in terms of home affordability, we are able to connect you with some down payment assistance programs through the Washington State Housing Finance Commission. And if you're interested in down payment assistance, just reach out to Homestreet Bank Affinity Loan Officer, go over the details on what's involved in those down payment assistance programs. You're able to to use some financial fitness tools and resources, and it can go over some of the newsletters and toolkits with you. And then we do offer other financial seminars throughout the year, such as credit or upsizing, downsizing, or right sizing home purchases. One less known thing is the benefits are available to immediate family members. So this is going to be for if your children are thinking about buying a house, or if your parents are thinking about buying a house or condo. The same benefits that I mentioned at the top of this slide are also available to them. All we would need is a pay stub from you to show that you're an active employee, and then we're able to apply the same benefits. And lastly, this is exclusive access. You do need to contact a Homestreet Affinity loan officer directly. Not all loan officers are able to provide this benefit, so make sure that you reach out directly to a Homestreet Bank Affinity loan officer like myself. Okay, and with that, I think I'll go ahead and open up for any questions.
Great, thanks, Ryan. We had a few a little bit earlier just about the HOA. One question is it possible to renegotiate HOA fees?
Most likely, no. The HOA fees are set by the condo association, whatever board runs the condo association, setting the fees. What you can do is you can participate make sure that you're participating in the condo meetings. There are times they may let you prepay the dues, but I don't think there's any chance for negotiation in terms of what those actual dues are.
Thank you. Another question is, how common is it for HOA rules to change throughout your ownership? For example, let's say, pets are allowed. Are those rules often changed, and how can you advocate?
Yeah, back to the same thing. If you are looking to, if that's something that concerns you, I would be active in the condo board. That way you're able to advocate for, say their rule is no dogs. Everything is, if you're in the meetings, everything is proposed and voted upon, and all of the people voting are in the association itself. So you are able to have some influence over the rules if you're involved. If you are not involved, you're kind of subject to, and you don't even vote at all, you're just subject to what the other owners of the association are voting for. This can range, size of the units does have a big factor. So if you are one of 6, it might be easier to sway the people in your majority. If it's a larger condo, sometimes upwards of a couple hundred, it might be a little bit more difficult.
Oh, thank you. It's a good distinction. We did have another question just around how can you find deals or even bank-owned condo properties?
You can find generally bank-owned properties. The bank-owned properties will be listed on their own websites. You can also find, let's see if I can find them really quick. I know that HUD.gov is the FHA's. I think.
Yeah. Thank you. Able to find that. We could put it in the chat.
Yeah, there's if you look up Fannie Mae, it's called REO, real estate owned. So Fannie Mae real estate owned, or FHA real estate owned, or Freddie Mac REO. Those are all options to find investor owned properties.
Great. So another question is, do you advise that folks have funds set aside for special assessments before purchasing a condo?
So, yeah, I would. That would be something that you would look into during the process. You would, when you're purchasing a condo, you get what's called a resale cert. This resale cert is going to disclose to you all of the happenings with the condo if they are considering an assessment, or an assessment has been recommended. This is going to be disclosed to you at that time. So that way you can prepare for if there is going to be an assessment that requires a large chunk of money at any given times. What's more common is the assessment is spread out into the HOA monthly dues themselves if they do have to do a major renovation project.
All right, thank you. What about if we know there are repairs or renovations needed? Can we get the cost of that integrated into the loan?
Not through the loan itself. If there is a major renovation project going on in the condo itself, it's likely not going to be an approved condo at that time. So basically, we're not going to approve buying a condo that, in the worst case scenario, the investor would have to take back because they don't want to take on that additional cost.
Okay. What about can you do a construction loan for a condo? Potentially is also maybe what the question's asking.
Yeah, we can. You can do that. There are some specific programs, just kind of depending on the scope of work that you're doing, where you're factoring in the costs of the repairs. If that's local to your specific unit, and then what you would do is just kind of have that factored into the loan amount. Sometimes that's depending on which type of product is available at the time. It's either going to be factored into that loan amount up front, or it's added on as what's called a home equity line of credit, where you're drawing the funds out as needed for the repairs that you're working on, and those repairs are monitored by the bank as you're completing them.
Thanks, Ryan. And I would just add, as Ryan said, at any point, this benefit is you can meet with a loan officer from the Affinity program. So, some of these questions makes me wonder, maybe there's a specific circumstance, and this is a benefit, right? You can meet and maybe talk about some options. So just, keep that in mind. Carolyn asks, can you speak to where all the Affinity program benefit reaches? So not just Washington.
So we can do anything we can lend anywhere in Washington, Oregon, Idaho, California, Arizona, Alaska, and Hawaii. So if you're looking at purchasing a property in any of those areas, then should be good to go.
And then just to piggyback on that, can you use the program for a second home purchase out of state?
You can use it for a second home. You cannot use it to buy an investment property. So if you're buying a rental property, the answer is no. If you're just buying a second home, like say down in Palm Springs, then yes.
Okay. This other question is kind of along the lines of trying to anticipate big changes. For example, let's say a condo has a big renovation project. How kind of is that decision made? The example given was knowing someone who had to pay $30K for a new roof, but didn't have the means. And how can you kind of predict and stay on top of this with condos?
So one of the questions in the condo questionnaire during the loan approval process is there any deferred maintenance? Forget the exact language, but it's along those lines. So is the condo aware that they've been neglecting, say, water intrusion through the roof, and they've been putting this off for a certain amount of time? If that answer is yes, they've been putting off these delays, then that needs to be addressed. It goes to a next level review of the condo, where our underwriters are actually taking a look at the risk involved. If the risk is too high and they think that is going to be an issue, they will not approve the condo. So in a way, it is kind of helping protect you to a certain extent, only limited to the resources that they have to review on approving the condo on your behalf.
Thank you. And then with that, are condo association decisions legally binding?
Legally binding in terms of if the condo says that this is the rule, you
I
have
would
to.
assume so, yeah, with
Yeah.
more context.
I believe it would be in the CC and Rs on what level of authority they have. That's the covenants, commitments, and restrictions, and they may have the ability to potentially place a lien on the property as well, just depending on the unit itself. If you are, say, I'm not going to pay the fine, then they may end up placing a legal lien on the property that
Okay.
you would be forced to pay.
Yeah. So definitely lots of fine print and rules to read. Yeah.
Yes.
Another question is what's current average mortgage you've seen in the Seattle area just recently?
Um, Mortgage in terms of, I'll go first. I'll start with, I guess, purchase price. It can vary quite a bit. Single family homes, anywhere uh, from just about just shy of 600,000 on up to um, over $1 million in terms of purchase price for single family residence. For condos around the area, anywhere from 250 on up to, you can spend over $1 million also on a condo in Seattle. So that is a pretty big range. So really does depend on the neighborhood and the characteristics of the property. In terms um, of mortgage rates, somewhere around 7%. Again, a lot of things kind of go into that. So if you're looking at putting 5% down on a $400,000 condo, I would expect a mortgage payment somewhere in the $3,000 to $3,500 range. So hopefully that kind of, I was kind of trying to be broad and specific there.
Yeah, thanks, Ryan. I know, I'm sure it varies greatly. A few questions here, just again about eligibility for kind of the benefit and how it extends to family. So, what about in-laws or siblings in law?
I believe siblings in law should be fine. I think that's okay. Yes, I think the restrict where they're cutting off. I think they don't want aunts, uncles, cousins, that sort of thing. I think that's where they draw the line.
Okay, thank you.
Mhm.
So, Carolyn has a good question, talking about inspections and really just doing your due diligence and understanding the association you're joining, kind of asking about bringing up the situation in Florida, that really tragic situation where the condo fell. I'm going to try to summarize this. Would the condo owners have been aware of that? And how basically, how can you ensure that, the repairs are being kept up to date?
Yes. So the when you do get a home inspection, they are hopefully going to be looking at the overall condition from what they can see in their best judgment on what's going on. The deferred maintenance question on the condo review process that I brought up was actually introduced as a result of that specific incident. So they're trying to get a better hold and pressure on the condo associations themselves to make sure that they are taking care of their buildings as a whole, and so those things don't happen going forward.
Thank you. So those are so far all the questions that we've had come through. Carolyn says thanks for your answer to that. I think kind of the main takeaway, it sounds like, is there's lots to take into consideration, lots of good research to do, and definitely not to walk into things lightly. I know that the Affinity program has lots of resources and more knowledge that the loan officers can share, whether Ryan or another within the team, if you are looking and interested in talking about specifics. With that, we just had one more question come in, and then I think we can close it out with that. is what is the difference between a condo and a townhome?
So with the so kind of as I mentioned in the beginning, a condo can take on different forms. So some of the condos do look like townhomes, but some of the townhomes themselves are actually also single family residences. What you want to look at if something is a townhome versus a condo is if you own the land underneath the condo. So do you own that area? If there are several townhomes that are connected, it would be single family residence but attached if they're connected. And what you're looking for in that is the legal description of the property. Does it include the land, or is it just the walls in subplot of that land, which would be a condo?
All right. Thank you, Ryan. Well, thanks everyone who stuck around and for your time, Ryan. Appreciate all your knowledge and expertise here, and look forward to hosting you again in the future.
Okay. All right. Thank you, everyone.